everyone. Good morning. Another beautiful day here in Victoria. Yes, it's cloudy, but we all know that when the spring comes here, it's beautiful and it's worth every cloudy, rainy day in our winters. And I mean, at the end of the day, you can still walk out with a lightweight jacket in this weather, so it's not bad. I'm not complaining. Anyway, so real estate update, guys. How you all doing? Questions about real estate. The big question again, still people are not sure about what's going on in the market. And I mean, I sound like a broken record when I say, guys, get ready for other, all-time new record highs again, because that's where we're heading based on current trends and current spending patterns of the government, that is, because the way the government is printing money and lending money, money is cheap to borrow, and money is lots of it is available. So what that means is the money that exists in the economy is becoming worthless. So you need more money to make up for what was printed. So eventually that catches up in prices. You get inflation, and there's all these in what we call in economics. There's all these variables. So there's oil prices. There's a bunch of stuff that plays into them. There's demand. There's supply. All these variables affect what prices are going to be. And a lot of these variables right now that you're seeing are affecting the price or pushing the price in the direction of it going up, okay, in the short term. So we're going to see prices go up within the next year or so. Some prices have already stabilized. So condo prices have stabilized. Now we're seeing, okay? House on land is going up, and I expect it to go up even more because land is a scarce resource. It's a hard asset. It's treated a bit differently than these shared assets or shared goods. So it's looked at like gold, right? Now, having said that though, because the government is lending money to people so that they can buy this property, and that's what's really fueling, as money's made affordable to borrow, they're going to keep putting that into the assets that they see are good investments and will continue to grow. So suppose, let me give you an example. If the government's giving you a loan at 1% and your assets going up in value 5% plus, which it has been over the last year, then it makes sense. Like, I'm borrowing at 1% and I'm making 4% with not even my own money. I'm going to invest. This makes sense. So as long as that's the case, it will make people will make money, and it makes sense to get into this economy. And as long as the mortgage is paying for itself, you're good. And the banks are being very careful. They don't want, so we're not going to see people are like, oh, well, it dropped, it's a bubble. We're different from the US because here in Canada, what the banks do when they lend, and I mean, majority of the banks, they have a qualifying rate. They're saying that, okay, I'll give you a mortgage at 1%, but if interest rates go up to 4% or 5%, I'm going to qualify you at 4%, but I'll give you a mortgage at 1%. So yes, people are like, oh, well, if interest rates goes up, a lot of people will be on the hook. Well, yes and no, because they're already factoring that in when they're lending right now in this time right now. And the government is aware of that. The government never wants its economy to collapse because everyone loses, okay? They want it to thrive, and they put all these mechanisms in place to ensure that in the event of shock or in the event of an earthquake they have a contingency plan of some sort. So I'm getting a Wi-Fi connection request here in the middle of a road. Interesting. Um, so these are important fundamentals to be aware of. My bet is that in the next year, real estate prices will continue to go up, guys. And if it's like the stock market. It really, in many ways, is very similar. So if you're investing for the next 10 years, 10 years, you're a different type of investor. You're long term. So long term, it may go down, it may go up, but in the long term, these types of assets are upward trending. Okay. So if you're a 10-year investor, guys, I say Don't wait for an up or a down. You just don't know what's going on. Just buy your long term anyways. Make sure you're pre-approved for financing, and that's the number one thing that keeps coming up with a lot of buyers is, are you pre-approved for financing? Now, I talk a lot to buyers. What about home sellers? Home sellers, I mean, it's a seller's market. There's not a lot of coaching I need to give to sellers because it's their game. Okay, there's not enough supply. I will say though, if you want to do well in the seller's market, don't try to get too lucky and put a ridiculous price there, because it looks like stale goods then. Price it right. Price it, like slightly above market, because you just don't know what's going on with the market, demand, supply. Um, but don't price it out of the range and then say, hey, I'll hit the jackpot. A lot of buyers out there are still informed. They're still looking at what's out there, and they still look at the comparables, and they're making informed decision. So, when I do work with sellers, I always give them three options. I'm like, you can price it at market. You can price it so that it's sold yesterday, because some just need to sell it for financial or personal reasons. And you can price it to gamble and Russian roulette. Like, let's put this price and see what happens, right? So you do have these three options when you do sell, but you know, research or whatever history has proven that if you price it just at what your comparables and slightly, and there's a range that you go into, if you price it at that range, you can do well, everyone wins and walks away, and that's the best scenario, is a win-win scenario, for all parties. Okay, and you don't risk in the end just losing because you try to overwin and your goods became stale in a hot market. And a hot market too, the other thing is, if your home sits on the market too long, they're like, it's so hot right now, why is this home sitting? Something's wrong with it. So that's the first conclusion, at least for me, that would come to mind. So it's really important to move it correctly in a hot market, so you don't risk that the other adverse effect or reputation to the listing coming. Anyways, guys, so that's my spiel of the day as far as listings, economy, buyer. What do I foresee in the future? If you have questions, I mean, about condos, I did a video on condos, townhouses, house on land, waterfront properties. Working right now with an amazing lady who wants to buy an island. Yes, islands are for sale here off the coast of beautiful British Columbia. So, there's commercial, there's a whole variety of products available as far as real estate investment is concerned, or your future is concerned. We could discuss these. There's timeshares. Uh, Everyone's, I always say, a different story, a different situation. And that's why I love to hear from you guys, because the more I know about you, the more of the right information I can cater to you, so that you can make the right choice. And notice that I always say information catered to you, because I will help you, guide you in the right direction, and I will, as best as I can, give you the tools and knowledge so that you make the best choice. But at the end of the day, and this, I always come back to this, is you will make the best decision for yourself. No one can make the best decision for you. I can give you advice. That's what subject matter experts do. I can give you advice. A lawyer can give you advice. Everyone can advise you. But in the end, you take the data that all these subject matter experts give you, and you make the right, best choice for you, is what it comes down to. So, dear friends, without further ado, I'm going to let you guys go, because I got to get back to work and my next appointment that's coming up shortly. And love you guys, and always there to help you, answer your questions. Just let me know. Cheers. Take care, guys.